Hi, everybody. It's Friday, August 27th, 2010. You might recognize the backdrop here from some of the television shows that I do. That's because I happen to be recording this video blog at a studio between hits. I just finished a debate on the BBC with Laura D'Angelo Tyson about the U.S. economy, and I am now waiting for a hit on CNBC's Kudlow and Company later this evening. But anyway, let's talk about what happened today and this week. We got the revision of fourth quarter GDP. The government brought down their estimate from 2.4% to 1.6%. And, initially people were a little happy because I think some of the earlier calls were for a revision to only 1.3%. So the bad news wasn't as bad as people were expecting, and the market rallied. But the market also rallied because we got statements from Bernanke speaking out of Jackson Hole, where they have an economic conference going on once a year, where he said that he stands ready to help aid the U.S. recovery, that the Fed has the tools to fight disinflation or deflation, and that the Fed will use them. And that's the problem, that the Fed will use those tools. Their only tool is to create inflation. You don't create economic growth by printing money. But of course, when you print money, the value of assets, like stocks, when expressed in terms of money, will rise. And that happened today. But of course, if you look at gold prices, silver prices, oil was up over $2 a barrel today on the back of those statements. If you look at what's happening in precious metals, silver had a great week. I think it was up, over a dollar, maybe $1.50 this week. Gold stocks, silver stocks were very strong. Some of the leading or key stocks, gold and silver stocks, made new 52-week highs this week. So they are responding to the inflation that Bernanke is claiming that he is willing to create to try to interfere with the necessary restructuring of the U.S. economy. And again, I still can't figure out why people are so fearful of deflation. You try to get a legitimate argument. They try to say, well, if there's deflation, no one will buy anything because people are going to wait for lower prices. Well, the only real industries right now where you see falling prices are in electronics, whether it's plasma TVs, cell phones, computers. Yet prices go down every year, but nobody holds off on buying. People buy anyway. And, when I talk to people about this, they say, well, deflation's okay if it's confined to one or two industries, but not if it's in the whole economy. Well, why not? What's wrong with food prices going down? After all, are people going to say, I'm not going to eat this week? I'm going to wait a week and see if the price of food goes down? Is someone going to say, oh, if the gasoline price goes down, I'm going to ride my bicycle this week? I'm going to wait for lower gas prices? Or if you go to the doctor and he says you need a particular medication, you can say, well, I'm going to wait a week, doc. Let me see if I can get that medicine a little bit cheaper. This is all nonsense. Falling prices benefits everybody. Not only does it benefit the consumer, but it actually benefits the producers if those falling prices are the result of improved efficiencies, and they can make up higher profits on greater volume, which is what always happens. Also talking about the recession, now that the economy is slowing, you have more economists coming out and raising their targets for the probability of a double dip. Rubini, I saw, was on CNBC yesterday saying that he had raised the odds of a double dip recession to 40%. Now, first of all, he claims he's an economic forecaster, but he says there's a 40% probability of a recession. That's like saying, well, I don't know, let's toss a coin. A coin could say 50-50. Why can't he just say with some degree of certainty whether or not there's going to be a recession or not? I've been saying for a while that it was 100% guarantee that we were going to have a double dip. In fact, I'm saying it's a depression, that it was a phony recovery to begin with. That's a real forecast. The problem is people are afraid to go out on a limb and say something, maybe because they don't really understand economics. You got all these economists up there in Jackson Hole. Where were these guys in 2007? Where were the forecasts of this recession? They couldn't see it coming. It kind of reminds me of some of these jokes about economists. Why did God invent economists? To make weathermen look good. There's another one. What do you get when you cross an economist with a godfather? You get an offer you can't understand. You got a collection of people in Jackson Hole who couldn't see this coming, including Ben Bernanke himself, who has been a fixture at Jackson Hole, and he has routinely gotten everything wrong. So I think we could look at what's happening in the market. The bond bond prices really got clobbered today. Even though the Fed said that they would do more quantitative easing, they would buy government bonds to stimulate the economy, you had a huge drop in bond prices on the day. On the week, bonds made new highs and closed lower, which is a potential reversal for the week. You had the same pattern with the dollar. The dollar made took out last week's high, but closed lower. So we had a weakening dollar and weakening bonds on the week, and strong commodity prices, particularly silver, then gold, then oil, and as I mentioned earlier, these gold stocks. If you look at the long-term performance of the gold stocks, look at the Huey index, the HUI, which is not quite at a 52-week high, but it's close to it. It's around 480. But about 10 years ago, you could have bought that index for about 40. It's moved up over 1,000% over the last 10 years. A fantastic return. I've been recommending people to buy gold stocks for the last 10 years. Gold stocks have represented at least 50% of my personal portfolio during the last 10 years. And I haven't sold a single gold stock in 10 years out of my account. Now, I had two that went bankrupt in 2008. I wish I'd have sold them. But I'm actually better off because we had such a sharp drop in 2008. In fact, that Huey index in about 6 or 7 months during 2008 dropped by over 70%. Now, I used that decline to add to some of my holdings in some of the stronger companies that did not go bankrupt, and so I'm better off because of that decline, and so are a lot of gold investors that understood the fundamentals and didn't panic when we had that big drop. Of course, there's still a lot of people that like to look at 2008 and say, oh, Peter Schiff is recommending gold standard stocks. Look how much value those stocks lost in 2008. Yeah, I agree. They did lose value in 2008. 2008 was not a good year to have owned gold stocks for the entire year. It was a great year to buy them late in the year. But if you've had a long-term strategy, even if you bought gold stocks for the first time when my book came out, my Crash Proof came out in February of 07, I think the Huey was around 350. So when it went to 150, you were down by better than 50%. But you're still way ahead of the game right now, and you're still much better off than had you bought, traditional S&P or Dow stocks. That would have been nice if in that Wall Street Journal piece they could have focused more on the long-term history of the type of advice that I've been following. I wanted to clear up one more thing too about that. The Wall Street Journal article. And, it's funny when I watch it again. It makes me think that maybe the Wall Street Journal thought that they were at my house to film an episode of MTV Cribs. I guess my crib and my rides are not quite as ostentatious as some of the houses and cars usually featured on that show. But I wish they would have had a little more emphasis on the substance of what I was saying. Rather than the house that I live in, the cars that I drive in. And yes, I do have oil paintings hanging on my walls. I'm 47. What do they think I'm going to put on my walls? Posters. But anyway, there was some confusion. People didn't understand. They thought that I was renting a house. I saw some comments like that, and I thought I cleared this up. I was renting a house until December of 2009. I decided to buy my house. I didn't buy it because I thought the real estate was bottoming out or because I didn't do it as an investment. It was a lifestyle. My landlord didn't want to keep renting it. He wanted to sell it, so I was going to have to move out and rent something else. I was running for Senate. I had a lot of stuff I was doing. I liked the house, so I decided to buy it anyway, even though I don't think it's a good investment. But, one thing, I paid for that house, and my house was built in 2002. And I paid 40% less than the original owner paid to buy the house in 2002. So paying a 40% below 2002 price, I obviously didn't think I was overpaying by too much. And also, from my perspective, I have a lot of money already in foreign stocks. I have a lot of money in gold and gold stocks and oil stocks. So it doesn't matter to me if I lose some money buying a house. I own other things. That I own several cars. You can see the cars in my driveway. I know those cars are going to lose value. That doesn't stop me from buying them because I do get to use those cars. I own a boat. I have a sailboat. It's a 33-foot sailboat. Didn't get to use it much this year. It's a huge waste of money, right? It depreciates, but I have it anyway. So I feel the same way about my house. It's just a question of I need a place to live. I didn't want to keep running around, so I bought a house. But just because I bought a house doesn't mean I think it's a good investment. I don't. And if other people don't have their better stock portfolios, I would rather see them buy that than buy a house. I think for a lot of people, renting still makes much more sense. Anyway, that's it for today. Take care, everybody. Have a great weekend.